Welcome back, everyone. It has been a minute since we have done an interview about the state of the market with an absolute expert in the market. And I'm so excited to bring back Ross Gerber from Gerber Kawasaki. They've got an ETF that's actively managed at a ticker symbol GK. Yeah, you can get it on Webull, Robinhood, you name it. We're going to talk a lot about the markets today, but we're going to start by talking about Tesla. And then we're going to talk about the commodities, potential super cycle. Are we going to invest in oil or what are we going to do? We'll talk about inflation and some of the other uncertainties going on. And so without further ado, welcome aboard, Ross, and welcome back. Super good to have you.
Yeah, thanks for having me. Great to be back. A
Super
lot's
exciting.
happened.
A lot has happened. Texas is getting Tesla's headquarters. Tell me, what is your take on Tesla moving their headquarters out to Texas? And when are we finally going to get the Cybertruck, man? I'm tired of the delays. And where's my self-driving button? And how's your new Tesla? There's so much to talk about.
You you don't have the button yet on yours where you can request it?
No button. I got the 2017 X. I've been a loyal Tesla fanboy here,
but you pay for full self-driving?
I paid for it. I got the computer update.
Oh my God.
I spent an hour on the phone with them. Sometimes I get the cynical comments in the chats or whatever. People are like, "Well, Kevin, you should drive safer." I'm like, I can't even turn on the safety monitoring.
Right. Exactly. I pushed the button, but I haven't gotten a safety score and I haven't gotten full self-driving yet. And I'm like, dude, I deal with you like all the time. Just send me self-driving.
Right.
But I'm not a safe driver at all. So, that at first I was like, I'm going to drive more careful because I want to get this. And I was like, screw it. I don't care. Like I drive the way I drive. I drive a Plaid. It's a fighter plane, and so it's like, I don't care.
You just got that too. Like what, a couple months ago? You were one of the first?
Yeah. I've had the Plaid now for 3 months. And it's an incredible vehicle. It's not only the fastest vehicle on the road by a margin. Like again, there's a lot of Ferraris like in the Malibu Palisades area. Yeah. And again, this guy in a Ferrari, older guy, pulls up next to me and he sees it's a Plaid, and he's just like takes a deep breath because he just knows I'll smoke him beyond belief. And he paid like twice as much for his car, But the car is also super comfortable. The technology is awesome because they upgraded the whole technology inside the car. And then on top of that, it's like really safe. So
what did you have
got
before?
The safest car. I had a Model 3.
Okay. And so you've noticed a difference in the technology? Is it much better? Like
they put the new technology in the Plaid and it's way better because they took out the stalks. You don't have to shift anymore. Like it's trying to use AI to guess whether you're going forwards or backwards, which is not a really hard challenge. And so it's pretty good at it. So you don't even have like shifting. And then you use this yoke, which I have mixed feelings about, but it's like a video game controller. So you use your thumbs for stuff instead of stalks. But the actual screen technology has been upgraded in many ways that I think will be pushed out to the other vehicles soon. It's really quite good.
Yeah, I still have the 17 Model X, and when I go to type in on the navigation, I'll push like 1 for the beginning of the address, and then I kind of have to wait like a few seconds before it lets me push the next number. So it's like it's like having a 4 or 5-year-old computer or like an Apple. It's like, oh man, they're like purposely slowing this thing down to
Tell me about it. I have that problem right now, actually. I was like talking about Apple stock this week too. Like when we get to Christmas, I mean, everybody's going to be upgrading iPads and stuff. I mean, we've beaten the hell out of these things. And exactly what you're saying, it's like you open up your kid's iPad and it's like moving like, it's like a Commodore 64 because he's got like 17,000 downloads of Unspeakable or something,
Yeah, no kidding. My kids are watching Unspeakable, so that's priceless. So what?
Priceless. My kids seen every one. Hopefully your fans are as loyal. You know what I mean? I mean, you got purple hair or green or whatever color that is. Like your fans better be loyal because you are certainly loyal to your fans, and you're certainly loyal to your state after all the pain you went through running for governor. By the way, congratulations. I mean,
thank you.
The fact that you got every other vote over every other candidate than the Republican that spent, 30 million. It's so impressive. Like,
thank you.
It's really impressive, Kevin. Great job. Great job.
Oh, thanks, man. Appreciate that. I want to thank you for your support as well. That's awesome.
Yeah.
So I want to know though, Tesla, man, this thing has been kind of trading sideways this year. I mean, I think we've gone from what, like 715
Well,
to
it's been
maybe
trading
780.
down. It was trading
Yeah, if
down,
anything, it's down. So it's lagging here. What's is it just because we had a good year last year? Is it the supply
Yeah.
crisis? What's holding back the EVs, the entire EV sector, the Lucids,
Yeah.
the Neo, the Xpangs, the Li Auto, whatever, the Arcimoto, right? They're all not doing too hot here in 21. What's going on?
Right. So yes, you have to preface like stocks are discounting the future. So like when Tesla ran up last year, it was on anticipation of all the good news that we're seeing today. And that's why Tesla stock isn't down, because it actually did deliver record results that we expected from it a year ago. So like when you looked at Tesla as a 30 to $50 billion company where it was before the big run, then it went up 20x. Now we're sitting here and now we're seeing them deliver what the market saw. And so it's like a digestion. It's kind of what Netflix has been doing for the last 6-7 months, and now it's breaking out. So when stocks have a big run on anticipation of great news and then delivers, oftentimes you don't get the gain when it delivers. You're getting the gain 6 months to a year before. So stocks, in my mind, typically are discounting about 6 months into the future what the expectations are. It can be a year, but typically 6 months. So right now, Tesla's trading at a price that's basically saying, well, things are really good, but what's next? What's the next catalyst to move the stock to 1,000, which is what I think it's worth, and why we've been buyers in my fund GK, in my personal account as well. I've been a buyer of Tesla here in the 750 range. And my previous, I was buying at around 600. And I've moved my buy rate up higher now. So I'm buying Tesla on any weakness at all. I've never been more bullish about a company in my entire career as an in the entire investment history of America. There has never been an opportunity to be an investor in innovation that is so globally significant, so massively important to society, and with a beyond genius running this crazy operation. That the 10-year opportunity is unlimited.
Just like Ford.
Unlimited. Listen, if the biggest issue Ford has is the fact that it's Ford, not the fact that what they're trying to do in the future is wrong. They get it now, maybe 3 years or 4 years late, but they get it. But the problem is what they already own. And what they already own are lots of ICE vehicles that they sell, Broncos, which they're selling a ton of, right? And a lot of car dealers that they have basically like sold their soul to that they can't really get out of. So they have a business model that unfortunately involves selling, gassy vehicles that need lots of service. And now they're trying to switch to a model that doesn't involve gas and no service. And there's nobody at Ford that wants that for real, because it's bad. It's bad.
Wow.
So if I sell a Mach-E, I lost a sale. If I sell an electric pickup, I lost an F-150 sale. It's just Ford customers migrating. That's not a great business.
That's interesting you mentioned that, because I think about my Tesla, the 2017. I've had the thing in service like once. When I first got it, there was an issue that got handled, and then I had it in to change its tires. But they put the little self-driving computer in at the same time, the upgrade. But beyond that, this thing has had like no maintenance at all. And I remember when we first bought my wife's minivan, it was like, all right, we'll see you in 3 months. We'll see you in 6 months. We'll see you in 9 months. Here's the schedule, the maintenance schedule, right?
Yeah.
And that's interesting. Yeah, because that's a big revenue driver. And you're right. I didn't even think about that. If Ford pushes EVs too much, they're really slamming all of their dealerships' revenue models.
Oh, absolutely. This is the whole problem. So like my Model 3 I bought was one of the first Model 3s that I bought. And, that Model 3 I had for about 3.5 years. And the Model 3 basically needed nothing ever.
Yeah.
No service, no oil, right? No brake changes. Now I had an Aston Martin before my Model 3, and I can't tell you how often I had to service this. It was like, and actually it was quite common during the time of like that day that I had that car, that it was like, oh, like, why would you buy this car? It's always in service, And I'm like, thanks.
Wow.
It's like a $150,000-$180,000 car used. And I
Ugh.
was like, it's always in service. So then I would look at a Ferrari, and that guy at the Ferrari dealership actually told me when I bought my Maserati, was like, you don't really want a Ferrari because essentially you'll be here all the time. And I was like,
Oh,
I don't really
wow.
want to be here all the time, So essentially the model of all car companies is service. So they build
Mm.
a vehicle knowing in 3 years it will need lots of service, and they all benefit from this ecosystem. And when I started in the business, one of my first group of clients were auto body shops in LA, just coincidentally. And I never realized how big the auto industry was until I started going from body shop to body shop and saw how much money all the people doing service make. So if you're not a highly educated person and you go to these, mechanic schools and you learn how to work on a BMW and you become like a certified BMW specialist, it's a very good job too. So for many auto workers,
Mm.
servicing vehicles is a very good job and supports a
Mm.
huge ecosystem. And that's really the problem with this dramatic shift to EVs, is a complete change in the ecosystem of automotive
Yeah,
companies.
I mean, that's just entirely fascinating, especially since, we even heard from Elon Musk yesterday that they're considering leasing out their full self-driving to subscription, essentially, to other manufacturers. How do you think that's going to work? Do you actually see somebody like Ford going, oh, yeah, we can't figure it out, let's just rent full self-driving from Tesla? I mean, isn't that like the biggest
Right.
Tesla ad ever, that a legacy company could potentially just buy? I mean, who knows? Maybe it'd be white labeled, right? It'd be like, oh no, this is Ford self-driving, but it's really Tesla in the backbone. But that stuff comes out, people know that. Is somebody
I don't think
actually
it'll
gonna do
work,
that? Yeah.
because you need the cameras and you need the
Yeah.
brain. And so you'd have to buy like a package, like the Waymo package for your car. You need to, like, it's just, he said it because I think he means well, but I don't see how a car company would adopt licensing
Yeah, it
autopilot.
seems like they would almost have to be manufactured with the 8 cameras or whatever, and have
Yeah.
have the cameras essentially already there, and then just apply the Tesla software. But is somebody really gonna do that? Like, is
No,
GM gonna be found dead leasing this stuff from Tesla?
it's just not going to happen because of all those issues from the manufacturing and technology perspective of what is put in a Tesla. Just like you can't just like license out an Apple, like,
Right.
can I just license an iPhone? Well, you can look at a Samsung and say it's pretty similar actually, and maybe the hardware and software in some ways are better, but the
Mm.
ecosystem sucks. And so it's like,
Hmm.
Elon said a couple of incredibly interesting things yesterday, which is why I pay attention to him.
Yeah.
And he was saying we're as much a software company as we are a hardware company.
Right.
It's very important to understand that. That made me very bullish, that statement, because it reminds me of Apple, where they really understood they had to make hardware that was great, the best
Mm.
phone. And they did. But they also fully understood that just being a great phone isn't a great business because it becomes a commodity. Just like
Yes.
Tesla's itself, the manufacturing margin is okay, but when you add in the software margin,
That's great.
that is huge. So when you sell a $10,000 full self-driving, package, that's probably like $8,000 or $9,000 of profit
Sure.
because you develop the software and it's scalable forever, right? So it's like Microsoft. And then when you build cars, you build this great car with a 5 or 10% margin, hope to sell and scale. So when you combine that, it's what Apple is and it's what Tesla's become.
That's incredible. Now, do you think that somebody like Lucid can actually hold a candle to what Tesla's doing? They say they're going to actually start delivering cars here in the next 2 to 4 months.
Yeah, Lucid's a company I know well. It was actually a year ago when I went to a shareholder meeting in Fremont that I went to Lucid. And I love the vehicle, and I think they've done a great job with design and hopefully production. They're well behind the timelines that they laid out to me. So, that, being said, I don't think Lucid looks at themselves as a Tesla. Tesla's
Mhm.
an AI company. Tesla's trying to solve an incredibly difficult challenge that I don't recommend people take on, and Lucid isn't trying to solve that challenge. What Lucid is saying is we're going to make a high-end EV that we can sell 100,000 a year of. And if I
Right.
can make 100,000 cars that sell at 150,000, I got a $15 billion business that might be worth 50 billion. You see
Right.
what I'm saying?
Yeah.
And that's a good company. It's a good, solid EV company. It reminds me of like a Porsche of EVs and or a Ferrari of EVs, where you have a high-end luxury car maker that will probably take share from Porsche and Mercedes. And I like Lucid. The valuation is already half that. You know, it's I think
Yeah.
30 billion or whatever. So there's upside in Lucid, but it's years away. And then you've got the Saudi Arabia angle, which is, are they going to use Lucid as their little toy to bring EV technology to Saudi Arabia, even though it's not to the benefit of shareholders, or it is to the benefit of a shareholder, but not outside shareholders. And so I don't like when majority shareholders do what's in their benefit at the cost of the minority. So I'm not in Lucid.
How would that work? Why would Lucid selling EVs in Saudi Arabia be bad for American shareholders?
Not selling, they would put a manufacturing facility there. So what Saudi wants is what China has, where you put the EV facility somewhere and you build this EV, Mecca in Mecca, or whatever. And so it's like they know that oil is dead. And they've now forced prices up so high to try to make up for all the losses over all the years and to pay their bills coming forward and all the investments that they've lost on in oil supply that's in the ground, that if they take out of the ground will force prices in half. So Saudi Arabia knows that they need to shift their economy into the modern era, and they've invested in many things, whether it be in entertainment, soccer team yesterday, or in EV technology like their Tesla investment. And when they got frustrated with Tesla and the whole funding secured thing, when they kind of screwed Elon, they sold their stock right before the rally and they bought Lucid. So their goal with Lucid is really simple, is they want to bring that technology and start manufacturing EVs in Saudi Arabia and make Saudi Arabia the EV center for the Middle East. Now, great idea for Saudi Arabia, but for Lucid, it's the worst place you could ever put a plant. Like, why would you want to manufacture cars in Saudi Arabia? It's like there's zero intelligence in that. It's like, why? Why? Where do you even get workers? Because Saudi Arabia imports almost like slave labor to do the work on the oil fields and all this. The typical Saudi Arabian doesn't work in an oil field or a manufacturing facility. Many people in Saudi Arabia are just supported by the government. They have government jobs. Everybody gets a government job, and you're just supported. So you have basically two stratas of you have wealth and utter poverty, almost like slave labor, and that's who does all the labor. So they would build these almost like Chinese plants, and essentially their society is so backwards. Like, women can't drive to work. Like, you're still working in a society where like murdering dissidents in foreign countries and cutting them up into pieces is okay. So I don't think it makes a lot of sense when you can open a plant in Europe or in China or in Asia. Like, if I was going to open a Lucid plant, I'd be opening in fucking Asia. It's like, It's a no-brainer. Look at Tesla's China. Tesla China
Shanghai.
it's the killer app. They're killing it in Shanghai. The Chinese manufacturing ability and their intelligence and the workforce and the productivity is unbeatable.
So that brings up a company like NIO. Battery swapping is obviously a little bit of a different direction, but arguably they're doing pretty well with self-driving as well, at least at similar levels where we are now. Certainly not with the full self-driving beta, but similar levels to what we have available in our cars now. Is NIO? They're not going to go structural battery packs, obviously, so we've got some differences here. But are they maybe a Chinese recovery play? Are they a long hold for EVs in China? What's your take?
So my favorite EV company in China is BYD. BYD makes EVs in scale. They sell them in scale, and they've been successful for a long time. So BYD is my number one pick. Now, NIO is the wannabe Tesla of China, and that's what concerns me. Is there's a lot of this like flashy stuff, and they have been delivering cars. So I don't own NIO in it. So I don't really trust Chinese stocks. So let's start with that. Investing in China right now has enormous risk. I think the biggest risk to the stock market is not inflation. It's China. The Chinese economy is under assault from over leverage and real estate collapse. It's very, very similar to the financial crisis in the United States in its structure, where you have hundreds of billions of bad loans or empty apartment buildings or unfinished buildings and not the money to pay for them. And there's only one solution to this, which is the Chinese government's going to have to rescue all these real estate investors just like we did. And this process is going to have to play itself out. And right now it looks like a slow collapse, because they're like trying hard to prevent it. But you can't see what the Chinese are going to have to learn is you can't stop economics. Economics is like nature. So you can't stop water, like, the Grand Canyon or something like that. I guess you could build a dam, but the water's still coming. And so it's like Chinese built this dam saying like, oh, well, who cares how many bad apartments we build? We have jobs. And eventually somebody will buy them. Well, now people bought them, but they haven't finished them and they're not going to finish them. And they borrowed a lot of money. And most of this money is internally borrowed. So when it goes bankrupt, it really destroys Chinese people. They lose their jobs. Construction, this because you're in real estate. Construction creates so much economic activity. It's just, it's the driver of economic activity. Here in LA, it's nonstop construction. That's why I'm in this room right now. I wanted to shoot outside, but there's like tractors going everywhere, like mansions going up like they're, like tiny homes. It's like, it's crazy. It's crazy. It's like insane. Like nobody builds a regular house anymore. So when you think, not here in LA, it's, you tear down a house and you build monstrosity, which is just a nightmare. So it employs tons of people. And so with the Chinese real estate slowdown, it's going to have this negative cycle of defaults, layoffs, less income, less spending. And that's how you get a recession. And the Chinese are setting up for their first recession. And so fortunately, because of Trump and the trade war, we had already started weaning ourselves from China. And this process is going to go full bore now as the Chinese continue to threaten Taiwan and continue to take a belligerent tone, which they seem to have changed their tune recently with Xi offering a summit with Biden, which I found the timing to be amazing. Like Xi's timing. He's like, well, we're about to run out of money. I better call the Americans because I might really be screwed.
Wow. That's a really good point. So now, I mean, Evergrande, it was a big deal about 2.5, 3 weeks ago. Since then, we've heard of some other smaller property developers defaulting, and really, it seems like the Chinese news has kind of gone to like page 2 of the paper. Is it complacent to say the Chinese threat is over? And is it going to come back harder and stronger, you think?
So I don't worry about inflation. Like I don't worry about what the media is worried about, because I think that's very short-sighted when there's real things to worry about, like China. And that's why it's on page 2, and 3, because, it's like, oh, this is a real thing that might really be a concern. So we have to distract people with things that aren't that important. I've been really confounded by China's actions recently, because I really saw an opportunity in post-Trump for Xi to bring us closer to the benefit of both of us. Saying like this whole fighting with Trump thing was bad. Now he's gone. Let's make up with the Biden administration and let's work together, because ultimately in a global economy as connected as ours, the more we work together, the more prosperity the globe will have. Okay.
Right.
For 100 reasons. And so like that didn't happen. And what happened was she said, I'm very concerned about losing power to Jack Ma and Pony Ma and capitalists and money and billionaires and famous TV stars. And China has video games everywhere and everybody's happy in China. China's great. And he's like, but I might lose power. And the way it works in China is you don't lose power. So he was like, I better rein in all these forces that make me seem like an old fuddy-duddy.
Wow.
And so boom, 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 boom. He just takes them all and throws them in the jail. And that's it. She controls the country now. If you don't do what he says, you are out of business. You are in jail. You will be deleted from the internet. You will not exist. Jack Ma is gone forever.
Wow.
Forever.
That's great. So what you're saying is you want to start a fund in China?
No. What I'm saying is Americans should sell all their Chinese investments. They should sell them all. I've kept a little bit in the battery makers and the tech makers, but the bottom line is that your money is not safe there. They don't respect shareholder rights. They don't respect outside investors. They are more concerned about control than prosperity in the short term here. And I don't see, they've alienated themselves from the world. And if they keep messing with Taiwan, they're going to wind up getting their butt kicked. Okay.
Oh, man.
So whether they like it or not, Taiwan is a free country. Okay. And they have no rights or claims to Taiwan or the South China Sea. We control the South China Sea. We've controlled the South China Sea since the Battle Midway, since World War II. Okay. So if you want to mess with the US Navy, they will learn very, very, very hard what a mistake that would be, as incompetent as our military is.
Well,
we
could have a whole live stream on that one alone there. But yeah, so that's very interesting. So and I mean, looking back at some of the things that have happened or have come to light, even just over the recent couple months here, it does seem like what you said about China is exactly what they're doing. I mean, restricting video games for children under 18 to certain periods during the day, a couple hours a night or whatever, and that's it. You've had stories of real estate property developers, successful ones that I can't remember the name of this one, but I read the story about this one really successful developer, and all of a sudden, whether he was forced to or whether he chose to, I don't know who would choose to, but whatever, gave essentially a televised speech about how he was a fraud. And then before you knew it,
what do you mean forced to? Of course he was forced to. You know?
I'm just saying, like, yeah, I mean, there's a point.
So Chinese, I have relatives in China, so my dad's wife is Chinese. And my stepbrother's Chinese, and I have family in China. So I know how things work in China, and I can't, I don't want to get anybody in trouble, but one of my stepbrother's real father, who's Chinese, was jailed for a period of time over a property transaction, and the politician didn't come out ahead. And so he jailed him. So I know what happens in China. So what happens in China is, like, if you get in trouble, there is no like justice system. If you get in trouble, you go to jail. And what happens is they put you in a room in a very uncomfortable chair, and you sit there, okay, until you confess, like it's like they don't even have to resort to like crazy tortures and stuff like American, like Guantanamo stuff. They just you'll sit here until you die. Okay. So either you confess or you're going to sit in a wooden chair for the rest of your life. And so people they confess, like it's how it works in communist
countries. The
countries.
Conviction rate in the courts is only 99.9%.
Yeah. So the easiest thing you can do is just admit all guilt, say I'm horrible, re-educate me and let me back out. That's what you have to do to be free if you get in trouble in China. So if you want to read about how socialist or communist government's justice system works, just read a little history of it. The post-communist era, after the communists took over, what they did to people. Certainly, we all know what happened in Cambodia when the communists took over. They killed millions of people. And if you really want some beautiful history, try some Russian history under Stalin. Wonderful communist regime that murdered and killed pretty much everybody it came in contact with. So murder and torture in jail is a part of socialism and communism that Bernie Sanders and AOC don't like talking about.
But you like AOC.
I don't like AOC. I like what she represents in theory. Young people motivated to make a difference. Like, I love that about her, and using social media and shaking up the establishment. And many of the things she does I think are very good. But she's also completely clueless. Like, she just doesn't have a worldview that's accurate. And it's mostly, I think, because of her age and her lack of experience in the world. Yeah. And so her belief systems are off. And so often she's pushing an agenda that's false. And because of that, she's discredited her value. And so now she's just like a laughingstock. It's like whatever she says, she's a joker. So she's actually done more harm for the cause. She started off doing tremendous good, and now she's doing harm for the cause of young, smart women becoming politicians, because she keeps doing all these things that I think make her look really dumb. And so we need young people in government. That's why I supported you. That's why I like AOC or whoever. I tweeted that if you are over 75, you shouldn't be in government or something like that. And it went viral, like crazy viral. Nice. And I was like, wow, people really feel this way. We have really old people running our country who are totally clueless. Like, my grandpa is young compared to the people who, you know what I mean? It's like, oh, my grandpa's dead. That's the joke. And so it's like, when you look at Mitch McConnell and Chuck Schumer and Nancy Pelosi, a bunch of 85-year-olds arguing about the budget and our future, we should be concerned, really concerned.
Wow. So I want to know, moving from China and politics, there's talk about this super cycle coming of commodities inflation that we saw after World War I, after World War II, somewhat right before the Great Recession, leading up to about the summer of 2008, where we've seen it recently. Aluminum prices, uranium prices, copper prices, lumber's fallen off its highs, but it's already started inflecting back up. Are we in a commodity super cycle? Do we go all in on oil and natural gas and some of these other commodities right now to hedge against clearly this inflationary storm?
So I don't know what's going to happen in the future any more than anybody. So when I talk about what I think is going to happen in the future, I always kind of laugh at my predictions because they're never right. So, predicting the future is not a business you should be in unless you work as a fortune teller in a carnival. And then it's a great business because people like my wife, do these tarot card things and insist that it's true. So I don't read tarot cards, and I do have a crystal ball in my office, just so when people ask if I have a crystal ball, I say I do. But the crystal ball has produced no returns, 0%. So I don't look at my fund and then rub the ball and say, what stock should I add to GK? And it never says add Upstart Holdings, or, it just doesn't tell me. So I have to just do that on my own. So when you're trying to predict the future with inflation, I think about my entire life. There has not been inflation. So when I was a little child, there was this thing called the oil embargo, where Iran didn't give oil to the United States. Oil prices soared and inflation went crazy back in 1978. Okay. Now I was this little kid, and I would get in my mom's car and she'd be like, we have to get gas. There's no gas. And only on Tuesdays, Thursdays, and Saturdays could you get gas. Literally, one of my earliest memories as a child was my mom, who actually now in hindsight was a young, attractive woman with a little baby and a gas guzzling Chevy or whatever she was driving. And she pulled into the gas station on the day that we're not supposed to buy gas. And she was like, we need gas. And she was like, son, you shouldn't do this in real life, but I'm about to lie to the gas station guy so I can get gas, And she basically gave him a pretty smile, and he filled up the tank, because back then you had full service, and a dude came and filled up your tank. And then when he looked at the license plate and saw, because it was based off your license plate, odd or even, that she wasn't supposed to get it, he was like, you're not supposed to get it. And she was like, oh, sorry, and I got a little baby, and I'll never forget that. Okay. Because I was like, my mom said lying was okay if there's a gas crisis. So I don't know if that was the lesson I got. I think the lesson I got is sometimes you got to do what you got to do, but when you go back to the 70s and you think about when we had a real inflationary problem, it was such a different world than today. So again, let's fast forward to today. Oil prices are high. Why? Because Saudi Arabia and Russia is like, F everybody. We're not going to produce another barrel of oil. There's plenty of oil. There's no shortage of oil. It's not like, oh, Iran is the only person pumping oil. We've got shale players like Oxy yesterday said, I would rather pay dividends to my shareholders than pump more oil if it brings prices down, because quite frankly, things have been too tough on us the last couple of years, rightfully, because oil shouldn't be used. And And it's like, so now we have to make in profits because this could be the last time we make profits ever again. Okay.
Wow.
And so oil is a cartel. So think about what a cartel means. They're actually illegal in the United States. I was talking about this. You cannot start a YouTube cartel. Yeah, right. Like you and all the YouTubers get together and say, we're not YouTubing unless you pay us more, per stream, and YouTube would be like, delete, like, sorry, no more money for you, Kevin, delete. And so like, you can't form a cartel in the United States. It's not legal. But yet now our oil producers are working with OPEC, the oil cartel, secretly to keep prices high, to gouge you as consumers for profit. This is not about inflation. This is about profits over people. Do not be confused. Okay. That's oil. Okay.
Yeah,
and
that's
then when you look at
because
supply chain, oh, sorry.
I was just going to say, it seems like fracking really took off, before the pandemic, the maybe a decade before the pandemic. Seems like fracking really took off. And we were finally, there was a time in the early 2000s where we're like, we're going to run out of oil in 50 years. Then we discover fracking. It's like, we got plenty. Let's go. Right. And so it's boom time. Everybody's fracking like crazy, and oil prices are coming down. From some of their 2008 and 14 peaks, and oil prices are coming down. Gas is getting cheaper until the pandemic, when gas and oil got really cheap. It went negative there for a moment. But what's interesting is right now we have half as many rigs operating in the United States as we had in 2019. Half as many operating. And so it is interesting. Like, why aren't we turning that on? And so you saying,
because
we'd rather
scared. Because if they turn them all back on and Tesla keeps doing well. And see, this pandemic surge is temporary. We've all been locked up for 2 years, and then you open up the door and you go to like the UCLA game, and it's like 100,000 people all eating hot dogs, and like all of a sudden it's like, I'm gonna have twice as many hot dogs. I was at the Dodger game. I'm gonna have two. I'm eating hot dogs. Why? Because we haven't done this in 2 years. But the hot dog guy who's used to selling, let's say 10,000 hot dogs at the game, is now selling 20,000 hot dogs at the game. He's got to get more hot dogs, but not just a few more hot dogs. He needs way more hot dogs. So he calls a hot dog supplier. I need twice as many hot dogs. Hot dog supplier says, I got 100 people calling me. I got 100 people needing twice as many hot dogs at every stadium in the country. So then he calls his Chinese hot dog supplier, and the Chinese guy's like, dude, I'm trying to get you hot dogs. I can make hot dogs. I can't get them across the ocean. So what everybody's doing is they're hiring planes, and they're flying the hot dogs over at twice the cost. And so that's this cost. But in another year, we have gone to many baseball games, and we're going to get back to the normal amount of hot dogs we eat at a baseball game, and that's going to be next year. So it's just like, it was like we all needed toilet paper. Oh, there's a toilet paper shortage. Now we all need hot dogs at basketball games. Oh, there's a hot dog shortage. And it's just a byproduct of the pandemic, and it'll smooth itself out.
So, this, even Jerome Powell has recently said that inflation is larger and has been larger and is lasting longer than expected. Is that just because people have more money, so they're buying more for longer than expected? This reopening boom is lasting longer, and fine, maybe inflation doesn't inflect down at the end of this year. Maybe it inflects down in spring or summer of next year. But either way, the trajectory is it's going down. So you may as well expect it to go down and invest that way, huh?
Right. And there's a couple reasons for that, but like, so firstly, there's technology. Like if you don't want to pay gas prices, you buy an EV, and your cost of living goes down. So technology has been driving prices down our entire lives. That's why we haven't had inflation. It hasn't been some miraculous government policy or interest rates. A lot of people think like interest rates are what's keeping inflation low. Well, interest rates have been zero for the last decade. So that's clearly not what's keeping inflation low. But look at the technological innovations we've had just since the pandemic. Like when you think about ordering food today at a restaurant or at home, you think about all the technological advancements and even paying your check. A company like Toast that just went public is a phenomenal technology company. It's a phenomenally good company. It's just highly valued. I love the company. If you use their technology and you're a restaurant, it's the best restaurant technology, in my opinion. Okay, now restaurants.
Do you invest in Toast?
I want to. I want it to go down.
Yes.
So I can buy
okay. Good. Me too.
Yeah. Yeah, I don't buy IPOs. I
Yeah.
think I wait. I want to see a couple earnings reports. Often you get the stock cheaper in 6 months as the lockup does expire, and
Yep.
there's so much BS trading in an IPO. So they soar, and you feel like you missed it, and you cry all night, and then it comes back. So it'll come back, and Toast is a key technology provider for the restaurant business. But if you think about the efficiency that good restaurants have added in their businesses, and now the customers come back, their margins are bigger. Their margins are bigger now. So it's like this efficiency of so many industries, like healthcare needs so much technology innovation to bring down the cost, and so these costs are constantly under pressure from technology. And a perfect example is how we've adapted. People don't drive that much anymore. I read this article about how the fact that we're worried about inflation and gas prices, but everybody's working from home. And I was like, yeah, it's true. I mean, for a lot of people, they don't drive to work every day, and really this burden is mostly on lower income people that have to drive to do manufacturing jobs or jobs you have to do in person, and construction workers. And so they still have this high gas cost. And that's why I think it's irresponsible for the government not to be releasing the strategic petroleum reserves now to bring prices down, because all Biden wants to do is tax, and he wants to help people, but yet he's letting them get gouged at the tank every week. Why don't you bring oil down to $60 where it's more fair for everybody?
Yeah, that's true.
So it's manipulated. Supply chain is temporary.
Yeah. I mean, I think they could move oil prices, I think, by about 10% for a year, if they just started releasing some from the strategic oil reserve right away. But oh well.
Yeah, you should be angry when you fill up your gas tank. If you're a listener and you go this weekend to fill up your gas tank, you should be angry that you're paying this much for gas when the government's allowing the Russians to just profit off of us and aren't doing anything because they're getting paid by the oil companies. Nobody's talking about the fact that while there's all these EV credits, there's still oil and gas tax benefits in the current package, because Union Joe, I'm all into clean energy, but boy, I'm not going to take any money away from the oil industry. Why?
Right.
Because unions.
Fascinating. Yeah, you saw that whole union debate here recently as well with Tesla and potentially larger credits going to companies like Ford and GM because of the union work. What about and a lot of union lobbyists potentially writing the actual bill for this larger infrastructure package?
No, the unions own Joe.
Ouch.
That's just a fact.
What uncertainties are left in this market? Because we just went from we had a nice dip here. We had our first over 5% correction in the S&P 500. We had fears about the government shutting down, the infrastructure packages, the debt ceiling. Is Jerome Powell going to taper? Jobs, inflation. I mean, Evergrande. We had a lot of fear over the last 3 weeks. And in the last week here, a lot of this has started evaporating. We got a deal on the debt ceiling. Infrastructure is getting kicked down the road for a month and a half. We've got, Jerome Powell's given us his pathway. We just had a jobs miss. What's your take? I mean, what's left? Is there any negative catalyst here, or do we just buy at this point because we're not seeing another dip coming? Did I lose you there for a second?
I think you've been jumping in, but I think that the fear was an opportunity for investors, So I look at, stocks aren't that hard to figure out in the sense of, after my whole life of doing this, and, I know, maybe I don't look as old as I am, I hope, but I've been doing this, 35 years or something since I was a kid.
So you're not eligible to get into politics?
No,
I'm kidding.
Yeah, I have to be 75. I have 25 more years. So if you think about all the bad years you've had in the stock market, which aren't that many, it's always because of interest rates. Always because of interest rates. The only thing that stock and real estate investors have to fear is the Fed. It's the only thing. So right now, I think Mnuchin did an interview yesterday, and as much as I don't like him, he's very smart. And he was talking that if rates were correct right now, we would have a 3.5% treasury based off the current inflation rate. And he's right. So if the current inflation rate continued and it was real inflation. Rates are way low, like way low, for what inflation is. But the market is being manipulated by the Fed to some degree, and the market's pretty sure that inflation is not going to stay after 50 years of evidence. You know what I mean? Right. So but what Mnuchin said is very true. So if the Fed tapers and taxes go up, we'll see another correction. Okay, it'll be an opportunity because earnings will continue to go up for some time. So when you're a stock owner, one of the cool things to do is if you track earnings, like the actual earnings with a stock price over 10 years, let's say, there's 100% correlation. Okay, so there's no confusion on what my job is to buy stocks with rising earnings. Sure. The question is, if you look at that chart, you'll see periods of time where the stock is way over the earnings line and sometimes when it's under the earnings time. And so over this period of time, you'll see this cycle, earnings going up, but the stock going from overvalued to undervalued and overvalued to undervalued as different events happen in the global economy that change people's perceptions. But as long as earnings goes up over time, that's the trend of the stock. And the trend of the stock will return exactly equal to the growth of earnings over time, right? So there's not much more to this game. So when you think about what great positions so many companies are to see increases in their earnings over time in the short, medium, and long term, many stocks are very attractive right now. But their valuations are very high. And that's where the interest rate thing hurts. So we saw the Treasury hit 1.6 today, and you saw tech stocks get sold. It has nothing to do with a human. It's literally computers at BlackRock or at Fidelity or whatever that says every notch up that interest rates go, they sell some of their high PE stocks. And it just brings down valuations. That's all it is. There's nothing wrong with the market or the stock or the company. It's just that if I'm paying 40 times earnings for something and now interest rates go higher, now I might only get 30 times earnings for it because the alternative is this choice that's guaranteed that earns me some interest. Now, the example I use with clients is very simple. Right now, I can buy a stock with a dividend of 1.5% very easily. So I can buy a stock that yields the same as a treasury bond and get growth of dividend and growth of earnings. So if I buy Apple, it's a way better investment than a treasury bond because it has a similar yield in some ways, but a growing dividend over time and growing earnings over time. But if the treasury bond goes to 2.5%, then Apple is just not as attractive as when it's at 1.5%, because now I can get 2.5% guaranteed. Okay. And if the long-term rate of inflation is 2%, now it's beneficial for me to buy that bond and sell that stock. And that's the relationship that hurts stocks and real estate. So what we look for, the only thing I care about is when Fed starts moving real rates higher or the economy gets so strong that treasury rates move substantially higher on the 10-year. So if we see this, the 10-year moving higher and then ultimately now the 1-year moving higher, that's the game that's no fun to play for stock investors and real estate investors. That's when you take your chips off the table and you sit on the sidelines. You go from like 100% stocks or whatever you're at, 80% stocks, and you cut that down to 50% stocks and you hold 30% cash and you just wait. And you just wait. So usually you have to wait about a year, and that cycle goes through, and then the Fed will be like, oh, we're done. And let's say the Fed gets to 1%. That's what I think they're going to get to, 1%. And they'll say, we're done. And the markets will have corrected, and then you'll have this like off to the races for the second half of the 20s. So the first half of the 20s, I think, will be pretty good, but valuations are high. So a lot of those gains have already been made. Then we're going to have this pause, recession type period of time. And then hopefully if the Fed manages it right, into another nice boom for 3, 4, 5, 7 years. So that's how I see the next decade. We will have a recession when rates go higher for sure, 100% chance. And I see that happening hopefully not till 23 or 24 because I like making money and I don't like sitting on the sidelines. But
that's interesting. So get out of your call options before 2023 when rates start bumping, huh?
Oh, for sure. Margin, call, all that stuff is you get wiped out. There will be people wiped out for sure.
Wow. Wow. So that's fascinating. So they gave us their schedule. They told us
Right.
one rate increase in the second half of 22, two in 23, and three in 24.
Yeah, I'm
So
out.
we yeah, we last saw this in 2018. This is the most recent time we've been down
Right.
this storybook. And the Fed had to quickly reverse course on how quickly they raised rates, because not only did they tank real estate prices 12% in the matter of a month in the summer, it was like May of
Yeah.
2018, but then the stock market fell about 6 months later in November and December of
It
2018,
was a negative
pretty
year.
substantially. Yeah,
It was a
you got
negative
a
year in the
negative
stock
year
market. Yeah.
solely because of the Fed, and then they reverse course, and you start seeing rates come right
And,
back
and
down
and
again.
that was the year of the Christmas massacre when the markets were down heavy on Christmas Eve, remember? And I was like going to Christmas, like, and I'm Jewish, so I was like, worried about the stock market, like, and we're getting hammered on a half day of trading, and I'm like, dude, Jerome, you don't get it. And what happened was Yellen had a sit down with Powell and was like, what are you doing? This isn't the 20th century. You don't need to be so aggressive. Stop raising rates. And then Powell's like, all right, I'm done. And 2019 was like awesome.
Yeah.
So yeah, that's exactly the playbook of what investors should be paying attention to. And Powell learned his lesson. And Yellen is the smartest person like one of the smartest people in finance. She went out in front of Congress yesterday and said, you idiots, if you keep playing this debt ceiling game that has no purpose, we will always pay our debts. Why do you do this? Because it's actually hurting people's perception of America's credit for no reason.
Yeah.
For no reason at all. And I love her. She went out and just scolded these idiot politicians who are playing this brinkmanship game with our credit. It's kind of like, you're married, like I'm married. It's like your wife saying, we're in a fight, and if we don't make up, I'm going to go spend all of our money, and bankrupt us, and it's like, really, honey, like I'm going to separate from you like tomorrow because, but that's kind of the game they play. It's like, if you don't agree to me, we're going to bankrupt this whole country, and it's got to stop. So Yellen is really the responsible party. She's overseeing the Fed in some ways. So I'm very confident with her around. Very, very confident.
Well, that's incredible. She's been, I will say, I feel like she's, but then again, Mnuchin, that was his role as well. Back when she was at the Fed, very apolitical. Now she's really molded into this political role of, for example, pushing a lot of the Biden priorities in fairness. I think that might just be part of cabinet.
Right. It's part of her job. She's not the Treasury she's not the Fed chair. She's the Treasury Secretary. So It is a political appointment. So, but she's so much smarter than Mnuchin. It's literally like,
wow.
I mean, it's not even comparable. I mean,
good vote of confidence then. Yeah.
She is a genius.
Do you think she'll, I mean, for example, today we had this total miss on jobs. I mean, it was a disastrous jobs report at the same time as you had the wages go up at like a 7.4% annualized rate, right?
So if you're working, you're making more money, right? Yeah.
I mean, weird, but I mean, doesn't this also potentially create these stagflationary fears? And like, how does the Fed respond now? On one side, it's like, maybe we don't taper as quickly because jobs reports is still lagging, right? But then on the other side, but wages are going up, which is going to push CPI up, or personal consumption expenditures might push this all up. Are they stuck between a rock and a hard place? Are they going to be forced to raise rates?
So national numbers are really hard to do analysis with because our country is so big and diverse. So what's happening in New York and LA is not what's happening in Louisiana, or not what's happening in Texas, or not what's happening in North Dakota. So when you look at like a national jobs report, it's like really hard to really see like what's the real trend of the economy. So so I'm very close with the Anderson School of Business at UCLA. We watch their forecast. We sponsor the forecast because I think they are some of the best economists in the world. And they give us their data, and they just had a forecast, and it is incredibly bullish what we see for the economy moving forward. And higher wages is a great thing. This is about wealth inequality, right? A good economy helps with wealth inequality, even though restaurant guys and the hotel people don't want to pay more for dishwashers or cleaners or whatever. They have to now. And so that brings everybody wages up. But now when that dishwasher goes to Target to buy Christmas gifts, they have more money. And that's a positive reinforcing economic cycle, as long as rising wages isn't so extreme that it hurts business. Okay. Sure. Right now it is. because a lack of labor supply. Now, here's the craziest stuff, right? Everywhere you go, help wanted. Many stores can't open. They simply don't have the help. Many restaurants can't serve the customers. They simply don't have the help. I go to this one place for lunch, and like they'll say like a couple days a week, like, please don't order because it'll be 45 minutes. We just don't have the help. And I was like, wow, that sucks, because I wanted a sandwich, you know? And I go, how do you not have the help?
Yeah.
Like, this is LA. There's people coming here from everywhere, from every country in the world. Like, didn't we just take 100,000 Afghanis home with us? Like, can't we put them to work? Like we have people coming over the border every day who want to work. How is there no workers? Well, we give them free money. We've been giving away free money to everybody, and it doesn't matter. If the state gives money, you have another kid, you get more money. See, you and I, we don't see all this because we don't qualify for any of it. So it's like, it's not our lexicon. But imagine you made $65,000 a year and you're getting checks for $1,200, and you're getting checks for $600, and you're getting another check for, this is all disposable money now to you.
Right.
Of course, it'd be smart to save and invest it, but no, it's like some of them are buying like, Cardano, cryptos or whatever. But a lot of people are just spending it, and they're spending it. And I'm hearing this from, the kids who work in my firm, and the people I know hang out with, more regular people. And like, I'm hearing these stories, and I'm like, what's wrong with these people? They should be like saving, paying off their debts, but they're spending their money. And so there isn't this huge impetus to work. And then the second thing is women in the workforce and our kids. My wife is a perfect example. She's a very hardworking woman, and we have 2 kids. And when they were home last year, it was a nightmare for her. She was not a great teacher. Okay. It wasn't her thing. And I don't blame her. It's a hard thing to be a teacher. In fact, I think we appreciate teachers tremendously more now, right? Now my kids are back in school, and it's a blessing. And LA Unified has done a wonderful job. Thank you, LA Unified, keeping our kids safe, testing our kids, wearing masks. They're at school. We haven't had an issue. Okay. Now, my wife is working right now, hopefully making us some money. Okay. And it's quiet in her house. There's no arguing over homework, and that's going to last till 2 or 3 o'clock. So getting women back in the workplace has been a huge driver of our economic growth and prosperity over the last decade. And the biggest loser in the COVID era were women in the workplace. Right. And it was a huge cost to our society because women are more productive and more educated than ever before in our society. So we need to get our women back to work. And this last month was really the first month, now that we're going back to school, that women have had this pressure taken off of them. And of course, stay-at-home dads as well. I'm sure there's a percentage of people who are in the opposite. But in most cases where we've seen growth in employment is from female employees. And I expect to see a lot more female employees getting back into the workplace over the next 6 months.
Nice. Yeah, it's fascinating. You saying people are spending so much of the money more, the child tax credit and that. Yeah. And you're right about women in the workforce as well. I want to mention I went to Las Vegas 2 months or so ago, and I talked to someone in the Prada store who was a subscriber. And they mentioned that Lauren was looking for a birthday gift, and they mentioned.
Yeah, I was about to say you were in the Prada store. Like,
not
how'd you
for
get
me.
there? Yeah, I was like,
I was suckered into the Prada store.
Yeah, your wife was like, "Hey, let's go for a walk over here."
Yeah, exactly. So anyway, he says they purposefully priced bags around or slightly above what stimulus checks were coming out for.
Oh yeah.
Because now was an opportunity where people actually had this money all at once because people are notoriously bad savers, and they were able to afford these things they previously.
Yeah, just go onto Instagram and like search Prada bags, and you'll see tons of posts, right, of people who should have saved that $1,200.
Yeah, no kidding. Which I will say, I went through AOC's financial disclosures because you mentioned AOC earlier. Yeah. Okay. So she got in 19 and had her disclosure was like 1 to 15,000 in checking and savings, 1 to 15,000 in retirement. And now she's had this $170,000 to $190,000 salary for the past 3 years or something like that. That'd be 19, 20, 21, 3 years, coming on 3 years here. And she got a new apartment in New York. She got a Tesla, but her financial disclosures reveal 0 additional investments.
Right.
Bad
That's
example.
Right. But I mean, she lives in New York on 160 grand a year. I mean, you know, she's got to live the life. She's at the Met Gala.
Exactly.
She's a fraud. All she wants to do is be rich. So socialists play this game like if they take our money, the working people's money, who are small business owners like us, who work our butts off. Like, I don't even know what time you get up, but I get up early and we work all day, 12 hours a day, and employ tons of people. And they want to take our money because we're bad guys because it worked out for us, you know? And she's the one who wants to just take our money, go to the Met Gala, live this lavish lifestyle of the politician who has the lobbyist taking her everywhere she wants to go. She certainly doesn't look like she's struggling at all. And they're all secret capitalists. You know, they don't want to do the work, but they want the wealth. That's socialism. That's the history of socialism. Trust me, she's house is probably really sweet.
Oh yeah. So okay, now I want to ask you about some specific companies. Where's your head on Affirm? Buy now, pay later. Have you looked into that one on fintech? It's been
somebody asked me this. I think I was interviewed like 10 times this week, and I said Affirm's the stock that makes me the angriest because I liked it and I didn't buy it. And I kind of looked at Affirm as like, what's the big deal? What's the moat? You like, they just give credit to everybody who buys a top Peloton. And I saw 30% of their business was Peloton. And that concerned me because the quality of the credit was good, but it was like the kind of thing you can't repossess if they don't pay, you know, like when they're gonna come and like take your Peloton back, you know? And so like companies like Affirm, and buy now, pay later is not an innovation. It's been around since the 20s, right? You like go to the store and you'd be like, I don't have money today. And the guy would be like, okay, pay me on Wednesday. It's been around forever. Well, but I think Popeye had it, right? Like, I don't have the money for the burger today. Oh, pay me on Wednesday. I think that was Popeye. You know, I don't know if kids even know what Popeye is anymore.
You like spinach.
Yeah, spinach. Can I have a burger too? And I'll pay you on Wednesday. That's Affirm. So I don't look at it as any great innovation other than it's super convenient and it's very effective in getting people to buy stuff. So companies have implemented this system, but it's really not a great way to pay for things because it essentially pulls forward sales by getting you to buy now, but you still got to pay later, you know? And so you're just putting people in debt. And so what I'm concerned about is quality of credit. You know, they give it to everybody. You know, it's not some revolution. It's just give credit to everybody quickly. You know, so I did the financial crisis. Companies like Affirm are the first ones to go BK when the rates go up and the people don't pay.
You taking on potential big risk. Yeah, they say they've got good credit scoring models, but you know, you go into a recession, that's always going to be a fear.
Yeah, credit scoring models do not work. Okay, it's really simple. People lose their jobs, they stop paying, and it sucks.
In a recession. Yeah. And you think one is happening within the next 5 years?
I know one will happen.
Gotcha. What about?
Yeah, I mean, it's statistics, Kevin. I mean, it's every 10 years we get 2 bad years. You know, I mean, how long can you do this before you accept reality that not every year I will make money? What I try to do is not lose as much money in those bad years, and I know they're coming. So it's just when you want to play that the bull market never ends, then when it ends, you're the sucker who loses all the gains.
Sure. Are you staying out of fintech then? Like, what about the SoFis of the world?
SoFi isn't really fintech. You know, like Coinbase is more fintech to me, and PayPal and Square. So SoFi is just a lender with very expensive advertising. Oh, dude, they spend so much money.
They got a stadium.
They got a stadium. They don't have a lot of customers, but they got a stadium. You know, you got to love like Noto's dropping 20 mil a year on a stadium and they can't make money. And I just don't understand that mentality as a business owner myself who pays for advertising. We first make a profit. So my company makes substantially more than SoFi and we're way smaller. So like, what kind of company would you rather own? You want to own my company. We're pumping profits because we run the business to make money. And now I could spend a lot more money on advertising, but I got you. So I don't have to go home, spend a lot of money on advertising. Because no, I mean, it's true. I do media all day. You have huge reach and people love watching you and it's better than advertising because it's authentic. It's not like, hey, kids, buy my fund, GK. It's the best fund ever made. trust me. It's like, who wants that? So that's SoFi's approach to getting clients. And it's an expensive approach to pry people away from JP Morgan and pry people away from all these firms. And then they get into all these other wealth management businesses with no expertise, but they're essentially a very good lender, and especially for student loans, which is really what built their business and where they should focus. So I like SoFi, but it's not a business I own stock in compared to Square. Square is the future. It is the ecosystem of the future. PayPal, with the new Venmo upgrades too. Wonderful. Like, I'm buying Ethereum on Venmo, and I'm buying Bitcoin on Square. And the other night it hit me, because I have cash in the bank still, that I'm like, I'm going to convert it all to Bitcoin. Because, like,
really?
Yeah, I'm done. I'm done with the dollar.
Oh, whoa. Wait. First, I want to mention before I forget.
I'm moving to the other side, man. I'm moving to the other universe.
I know. We got to talk about that. I just got to quickly say, make it clear, this is not sponsored.
It's not sponsored.
I have not been paid.
I'm friends with Kevin. Yeah, I'm friends with Kevin.
I love you. Okay,
I love you too. We got to do a Tesla tequila in real life. I was going to come up there.
Please, we got to do a double. We got to do a double date. Yeah. We got to make it happen. I got this much Tesla tequila left. That's enough for one shot.
Oh, I got a whole bottle. I got a bottle right here. I haven't even opened.
All right, bring that. We'll finish that off too. So not sponsored. Just to be transparent, I don't own GK, but I support GK. I support.
You don't own my fund? God,
I do not.
To buy this month. You're buying.
I have to stay.
$500,000 of shitty stocks in it.
I have to stay non-partial.
Okay, that's fair. That's fair.
Okay, all right. See, that way I can say not sponsored.
You're non-biased. Okay? You're non-biased. Okay, yeah.
Bingo,
you're non-biased.
Okay? So, but wait a minute.
You will not benefit.
I need to know this though, because you're giving me conflicting signals here. You're saying you are Mr. Anti-inflation. You are Mr. Right. There is no inflation, okay? But what you're telling me is you're going into an asset where 50% of the reason people are buying it is because they're worried about inflation. And now you're done with the dollar when you're telling me you like Janet Yellen at the Treasury.
Yeah, that's true, huh? I'm not worried about the cost of goods going up substantially over a long period of time, okay? Because you have a certain amount of goods. So the definition of inflation is more dollars chasing the same amount of goods, right? So that's essentially what's happened. So the government prints this money, gives it to people, and then it chases the same amount of goods. So everything got more expensive. Kind of like if you're trying to rent a house over Christmas in a ski area, prices are up substantially if you want to rent a house in a ski area, right? Everybody wants to do it. So it's more dollars chasing the same amount of ski houses, right? That's inflation. So I don't think that will be that way next Christmas, for example. I think there will be less demand next Christmas than this Christmas for those same ski houses. Not because of a lack of desire to ski, because I think more people will be traveling internationally, like things are just going to get back to normal at some point. And I do suspect that the pandemic is on its last innings, which is hugely bullish. So my medical experts are cautiously optimistic that this could be the last big wave, and that may be true. And that could bode very well for next year. But the government has this attitude that there is no repercussion for the endless deficits that we run. Mm-hmm. And so if a dollar can be printed by the trillion, I mean, they talked about this week printing $1 trillion platinum coin.
Yeah, true.
I didn't bring this up. They brought it up. Yeah. Okay. If you're going to print $1 trillion platinum coin, that means that I'm moving all my money to Bitcoin. Because
and Bitcoin, not Ethereum.
Well, no, I have Ethereum too.
Just some. Okay.
Both.
Okay.
I like them both, and I like them for a little bit different reasons, both. But I do think ultimately the real asset that institutions will own will be Bitcoin. Okay. And like when you look at the sovereign wealth fund of Holland, let's say, or something, they're going to buy Bitcoin. Okay. So what I think is happening is the destruction of fiat. So like what Venmo and Square have done, and the genius of these companies, is that now they have mixed crypto in with traditional currencies. They're getting people to move money out of traditional banks to hold on their platforms in cryptocurrencies, because nobody would move their money from B of A to Venmo just to hold cash, right? Like people don't just move like, I got to move 10 grand into Venmo. So when I buy stuff, there's cash already there.
Right.
Okay. Nobody does that, right? You
No.
buy something, it takes that out of your bank. So the banks are still charging their fees and ripping off people and whatever. And they're perfectly fine with Venmo, right? Because, it doesn't hurt them. But now Venmo's saying, well, now you can buy all kinds of assets on our app, like crypto assets. And then you start transferring money into your crypto assets that are now held on your Venmo or Square account, right? So now let's say in my Square account, I have, I don't know, $9,000 worth of Bitcoin. Okay. So now somebody says, oh, will you Cash App me? Well, I still Cash App them in cash, right? In dollars. But if I do it in dollars, I can see their name and it's like a whatever. But if I do it in crypto, it's a crypto address. But what's the difference? There is none. There's no difference anymore. So we're very close to a day where when your friend says you owe me $50 for drinking tomorrow night, you'll be like, okay, I'll send you 0.2 Bitcoin or whatever it is, 0.002 Bitcoin, or $50 cash, and you'll just convert your Bitcoin to cash for the transaction, just like you did with your bank.
Sure.
And essentially, Bitcoin will become the global reserve currency for the irresponsible governments of the world as individuals take control of their finances, take control of their equity, and not allow governments to dilute their wealth. So when you look historically, World War II was very much started because of economics and inflation in Germany. So if you go back to 1930, 32, post World War I, Germany was in a horrible place. And the wealth of Germany was just destroyed post World War I. And that was the punishment. So the Europeans created this plan that was like, Germany, you will never be strong again. And that's like how Hitler was able to rise. They had huge inflation. The value of their currency dropped to zero. They lost all their wealth. Okay. And it fermented this nationalism that led to Hitler. So like when you think about countries just, printing money like crazy and destroying the wealth of its nation, what it creates is horrible outcomes. And so people are not going to let that happen. And they're just moving their money into this alternative global currency that nobody can stop now. So if you're in Nigeria, Afghanistan, if you're in Chile, El Salvador, you don't need the government bank anymore. And that's a huge plus for society.
So you're saying maybe as for like countries with developing currencies, they can get into Bitcoin. But I mean, I don't ever see Bitcoin replacing the dollar, certainly not as a means of transaction. I mean, maybe a digital dollar.
No, we got to print money. We already have the digital dollar. You Venmo is a digital dollar, right? So like,
sure.
So governments have needed to print money in America since 1971, I think, or when we got off the gold standard, 73?
73, something like that.
73. Yeah, I was a baby. It was Nixon. And we were bombing the hell out of the Vietnamese. And we ran out of money. And so we were on the gold standard up until my life began 50 years ago. And Bitcoin is just like the gold standard. And so governments need to print money to survive, and that's what they do. They run deficits, and how much of a deficit as a percentage of your GDP and or debt is what your inflation rate is how much more money you have to print every year to make your bills.
And you were right. It was 71. You were right.
71. So like when you think about like America's like $28 trillion in debt, and we're going to go $2 or $3 more trillion in debt this year. Our real inflation rate's like 10%, let's say. Yeah. So we're printing 10% more money. So like if I just buy real estate, I'm going to make 10%. Do you understand?
Yeah.
If I buy Bitcoin, I'm going to make 10% because these are fixed in value, but the currency using it will continue to be worth less, inflating prices in dollars. Now, I said this to somebody the other day. I said, real estate's doing real shitty. And they go, what do you mean? I go, if you price it in Bitcoin.
That's funny. Yeah, that's.
Would you rather own a piece of land or would you rather own Bitcoin? And I would argue you want to own Bitcoin.
Really? Okay. So is it something where, or would you consider? Well, that's interesting.
So now I live in Bitcoin terms. Actually, I don't even think in dollar terms anymore. I've moved away from the dollar. So I think in Bitcoin terms. That way my money isn't being deflated every day by the government. So if all of my assets are crypto or investments, I don't need to hold any dollars anymore. Why would I let them control this?
Then I want to know, would you Would you? Okay. Well, gosh, would you take out? No, you don't like margin. So you don't like margin. You like crypto. Would you buy NFTs then as sort of like a crypto
An
property? There's the
investment?
question. Yeah. I mean,
Yes
like
and
if.
no. Yes and no.
Okay.
I think NFTs are the beginning of something.
Okay.
So most NFTs today are worthless. And what that is, oh, there you go.
There we go. I lost you there for a
Yeah,
second. Yep. Go
yeah.
ahead. All right. So you
It's
said
like,
most NFTs are worthless. Go ahead.
yeah. So like, it's the beginning of like digital property, and it's the beginning of real digital assets of value being created, whether it be like selling parts of real estate. For example, let's say you own 15 homes that you're renting out right now. You can put it in an LLC in one big thing and then make a digital token for it and sell off the parts of your real estate empire, let's say to outside investors who would then receive their dividend like in Ethereum, smart contract, the percentage of each rent. And those assets we're going to be able to buy and sell just like stocks through digital assets like NFTs. So NFTs are the beginning. It's the collectible side of digital assets. It's an easy way for people to get involved with digital assets. But what it's going to build to is real digital assets like buying parts of loans, many securitizations that are happening in big dollars for Wall Street will be able to now be in smaller dollars for Main Street. And so I see a huge future for digital assets. NFTs are sort of the door opener. Now, some companies are really smart with NFTs, and they're using these collectibles to add value to other things, like in the music industry, for example. So we're working on an NFT project with one of my music companies, and it's like you buy a ticket to the live stream, you get an NFT poster, from the artist. Yeah. So like you pay an extra $2. So I think there's a price for an NFT that makes sense as a collectible. And then you see this like CryptoPunks thing. And my friend was arguing it's like the future Warhol. Now this person actually owns a Warhol. So wow. I said, you want to trade a CryptoPunk for a Warhol? I'll buy the CryptoPunk and trade it to you for the Warhol. And will you do that? And he looked at me like, fuck no, So I was like, so you think it's worth this? In one moment, it's not a Warhol. Okay. It's just not. And so I think people are deriving value because of scarcity and because it's new. But in reality, there's no value in a digital image.
Sure. That's interesting. So in other words, you're kind of torn on whether or not you'd actually move your digital tokens to your digital image.
Well, so I believe that art has a broad definition. Okay. So what a lot of people believe is you don't paint it and put it on a wall, it's not a piece of art. Well, I don't necessarily believe that. I've seen lots of artists, from visual artists to crazy artists, and I studied this in school. There's a lot of art out there that you would be like, how is this art? You know what I mean? Like we can go to the Museum of Modern Art right now. There's like this big, like at Broad, there's this like big red chair that's like super oversized chair that's like 50 feet tall. And I was like, this is art, a big red chair. But it's like meant to make you feel small, or how a rat feels. I don't really get it. It's art. And so I don't want to discount digital art because I think it will be legitimate. And there's ways to make it legitimate, like this guy, what's his name, Beepole or something? He figured out a way to make a legitimate art piece from his work. And I consider him a real artist. So I think his work will retain value. As artists create, they build value in their work through their actions. And so you're betting on the artist. So when I buy actual art, I usually support up and coming artists. And I'll only spend so much on art, because I want to support art. I do. I spend a lot of money supporting artists because I love art, and I think it's an obligation that people support art. And artists struggle. It's a hard business, and I love art. And so we need support to keep this alive. So I like to support young artists. Like I'll go down to Venice, you go to these galleries, and we support the Venice Art Walk, which is a great event for the Venice Family Clinic, which is a wonderful organization. And we support it and sponsor it. But the best part is going on the art walk. You walk all around Venice to all these galleries. There are super talented people out there painting, trying to make a living, throw them a few grand for a beautiful piece of art. But then they work for their lives. And hopefully these people become like the Elon Musk, right, of art. And then the things you bought 20, 30 years ago end up having tremendous value. You get the return enjoying the art, but it's really about the artist. And so I think if you're going to buy an NFT, it's the same risk reward, you know.
Fascinating and very well said. What about, I'm going to jump for a moment. You had mentioned it earlier in the discussion, tiny homes. You know, if people are throwing up properties like, I don't know, some kind of reference to it. But what's actually the opportunity here? I understand in California now we can do accessory dwelling units in the back. We can drop them in and stuff. But at what point are these manufactured homes just more expensive than just building them conventionally in somebody's backyard? Like, are tiny home companies or 3D printed home companies, are these actually worth investing in? Or is it better to find a contractor who has figured out how to streamline this in person?
Well, you're in home remodel and construction. I'm not.
Yeah.
You know, we've talked about it much how I hate building homes.
It sucks.
Like now I own Lennar. Now, granted, I'm in the home building business. I own Home Depot in the fund. I own Lennar in the fund, and personally too, we own a lot of real estate in our fund, and that's one of the reasons we're different. You know, we have about a 10% allocation to traditional real estate, and we have REITs in our fund, like the MGM Growth Properties in Vegas, which has done very well for us, and IIPR, which is the cannabis REIT that we own. So we're very involved with real estate in my fund, GK, and also in our investments in general. And I like real estate, but I can tell you the hardest part of real estate has nothing to do with building anything. It's called getting permits. It's getting permission, getting entitlements. The money in real estate is made by taking a property and making it better. You figured this out early in your life. And that's, I think, was your first big success, was figuring this out. It's not flipping homes. Flipping homes is just hoping rates go down and hoping people are dumb. But when you buy a home like what you do, and you see this kind of house, and then you see a vision for what that house could be, and then you invest the 20 or 50 grand into it, and you make this house way nicer, because so many people just don't make any effort, right? And then a renter comes in and says, I'll pay $1,000 more a month than they were getting because you made this investment, and it pays off. Because you invested 20, 30, 50 grand, and now you're getting 12 grand more. It's a good investment, right? 40% return or whatever, 30% return. So like when you improve real estate, there's a lot of upside, especially with entitlements and permits. But it's unbelievable getting this done. It's unbelievable. That's why I'm not in the business personally. That's why I don't fix up houses and do all this. I actually love architecture and all this kind of stuff, but I would never take on building a house. Like, I would go nuts just dealing with the permits and the contractors. We just tried to add one thing, like electrical, you know, and then the electrical guy came out, the permit guy, and it was like, oh, it's not done right, and then wrote us up. And it was like, if we didn't get it fixed, it was like a $5,000 fine. And I had to have them come back out like 3 times. And this was just, I think it was just because we were dealing with trying to put in a Tesla power thing or something. It was, and I just gave up because I was like, dude, I don't want to deal with these inspectors ever again. You know?
No. I mean, there's a reason people don't pull permits in California. It's because they've made it so adversarial, the relationship.
Oh, totally.
It is so ridiculous. I just had on a property that I remodeled right before the pandemic. I submitted plans and everything, and they approved them during the pandemic. They never called me again on it. So I'm kind of like, whatever, like that's been like, we finished that project a long freaking time ago. Now they're like, hey, when are you going to submit those corrections? Like a year later, I'm like, whenever you give me the plans back. And they're like, well, we lost the plans. And I'm like, great.
This is a typical story though. This is typical.
Yeah. So they don't have my plans because I gave them all 3 copies I had because I wrote the plans or pencil and eraser in their office. Because I'm like, I'll be damned if I pay 10 grand to an architect when this is so stupid. I could write the plans up in your stupid office. So I filmed me doing the plans.
Oh, so you have film of it too, huh? You're like, here's me.
Oh, no.
Here's a video of me doing it.
I have a time lapse of me and them coming over like, oh, well, just make sure to do this or whatever. And they lost my 3 copies I made for them. And now they're like, well, if you don't get us new plans by the end of the month, we're going to start fining you $1,000, you know, per week or whatever. It's like, these people are just, it's like the processes are just scum. It's so broken.
You know, it's like, I look through your videos, you know, and it's like, you have all this like real estate stuff, and then you've just like completely gone all into stocks. And I think when we first met, I was like, dude, I don't know how you do this real estate stuff. Stock market's so much easier. It's like you can make all this money and not have to deal with the city,
Yeah,
and
yeah.
it's like, and now you're like all in stock guy all day. And I'm like, I knew Kevin would figure this out. It's just,
Kevin's gonna come around.
he will,
Well,
he'll come around. I don't know. Are you doing lots of real estate projects still? Or are
yeah,
you
I mean,
mostly focused on the stock market?
I just bought a couple more, but I'll tell you, anytime I do a project now, I look at it and I'm like, man, okay, so maybe the upside on this is like, I don't know, say it's $100,000 upside. You buy a place for 575, you put 40 in, and it's worth 725 or whatever later. Great, I've got a nice hedge here on inflation. That's awesome. But now I look at it and I'm like, gosh, the capital I tied up for that is large. So I tie up,
You're coming around my way, baby. You're coming around my way.
Right. So I look at it, I'm like, well, wait a minute. I could just do the math here really quick on what I could just go in here and I can just sell 50 November puts on a firm, and I go sell 50 November puts on a firm, for $130 or whatever. Or, you know what? I'll even move it to at the money. I'll just do the math right now. I go at the money. I make $100,000 premium for selling at the money puts for 42 days. And I didn't have to.
No, that's risky. That's risky.
There was no inspector. No, I know. I'm not saying go sell all these.
No, but you're absolutely right. And I figured this out at a young age. Real estate is a job. Like you have to physically do it. Investing is your brain. Like you have to think. You have to think, and make smart decisions. But it's way more lucrative investing in the stock market. It's way easier. I look at real estate exactly what you just said. It's a safe investment. It makes sense in a portfolio for people, especially their primary residence. But if you buy apartment buildings or houses, it's a job and it's work, and you're earning the money actively, in my mind, versus buying a REIT where you get paid and hopefully you buy it at a good price. You make 20, 30% too. Plus you're getting paid your dividend. You don't have to do anything.
Do you ever buy any REITs?
I do. I said, we have about 10% of REITs in the fund. I own a ton of REITs myself, so my fund GK is my portfolio. It's not like different, it's different in that, I don't have to pay capital gains taxes, so, it's like a dream come true for a stock trader. And, it's the tax advantages are huge, and they kind of put it in this tax bill for a second, and it got kicked out to take away the ETF tax advantage. But the Vanguard people probably went and murdered somebody quickly, and so Vanguard doesn't want the tax benefit taken away, right?
No,
and so so ETFs have this inherent tax advantage that is great. And so if you buy my ETF, that's what you're getting is basically my portfolio, and it's about 10% in REITs right now. And I think our overall allocation to real estate is about 14%.
What do you think about InsurTech, like the Lemonades of the world?
Yeah. Well, I'm in the insurance business at my firm in GK, and we just did a deal with the same company that does the life insurance for Lemonade. And it's called Bestow, and it's great because it's just like a link, and you can sign up for term insurance and get it without any physical, any medical, anything. It's like a firm of insurance, like life insurance. And I've been doing life insurance my whole career, and it's a very cumbersome process, and one that everybody needs. If you're married or have kids, you need some life insurance. And so having these digital solutions are huge, because the industry is like a bunch of really old, untech savvy people in insurance who don't have tech solutions, who use traditional agents who are typically old, and the younger generation doesn't relate to this in any way, shape, or form. So Lemonade comes around and starts with renter's insurance, which I'm sure most young people didn't even know existed, which costs like $10 a month and totally protects you. You know what I mean? And it's like, everybody should have renter's insurance. It's like $10 a month. So Lemonade starts this renter's insurance business knowing they're just getting a list. And then they start doing PNC and auto and life and health and whatever. And they built this beautiful online platform. And I really like what they're doing. But we're using the same company for life insurance as Lemonade. And when we started, we were like, well, we want to have the same interface as Lemonade. And they said, well, they do a little bit more business than you guys right now. And I was like, well, you never know. they're spending a lot on advertising. But they mentioned how many insurance policies a week they were doing, and I was like, wow, this
Nice.
Lemonade is a legit company, and it's on my
Yeah.
watch list. I'm waiting for it to come down. Same thing, IPO, like a firm. I picked
It's
up a little.
almost back
I
at
know,
IPO price.
I know, and it's a good company, and I know the insurance business really well. So it's like, and they're doing very well. And I think younger people, they're at this age now, the 35-year-old millennial. You're at that age too, where it's just like you have a family, you got a house, you need
Yep.
different insurances. Now you're in real estate, so you know this already. But most young couples, because I'm a financial advisor and at my firm, we advise many young couples. That's one of our focus is young individuals and couples. They know they need these things, but the traditional sales methods have not worked with them.
Oh,
And so
no.
Lemonade has really worked, and we're sort of an agent version. And that's the way we're marketing our insurance is like, you can do it through Lemonade, but if you have any questions, we're here to help you with questions.
Sure.
And we can do the same thing, same insurance, same everything. So
Yeah, that's it. Yeah, SoFi, actually, if you go to SoFi for life insurance, they just affiliate link you to, I think it's Ladder
Right.
Life Insurance.
Right.
It's like,
which is the
they
same
just get the
people.
affiliate commission. Yeah. It's
Yeah,
interesting.
well, insurance pays good commissions,
Mhm.
so like first year commissions on a term policy are good,
Speaking of which, everybody should go to metkevin.com/life.
Do you do life?
Yes,
Do you,
that's so actually with Lemonade too. So I have an affiliate link with Lemonade and
but you're
and
an
Ladder
affiliate. Okay.
with both
Yeah,
of them.
see
Yeah.
see
I
a
don't
lot of
do
people don't know
insurance.
how a lot of people don't know how this affiliate thing works, which is
Yeah.
actually wonderful, especially not only for YouTubers, but also for the companies. This is actually really how most advertising is done now, because we all know that YouTube is where everybody's eyes are, not on CNBC. And so, and especially when the top guy's got green hair, I mean, who would you rather watch?
No.
You want to watch like, what's his name? Wilford Frost. Hello, it's Wilford Frost. So after the close, nothing happened again today. I'm going to bring in the same people who don't know anything to talk about how Tesla sucks today. It's like,
That's great.
I'll have, trust me, I've done like 20 of these this week. You know what I mean? No, I'll do a green-haired guy all day versus having to do traditional media.
Wow.
And I love traditional media. I love you all. I know you're not watching because this is YouTube, but I love you all too.
That's awesome.
But I love you too. Yeah.
Wow. Okay, interesting. So, what about where's your head on some of these, like the gene editors, like CRISPR and Edit, Invitae, and Telia? CRISPR's been having a hell of a time. It's down another 4.5%. It's at $98. It's down from like 220. It's all time.
How much revenue does CRISPR do? How much stuff do they sell?
Let's find out. I'll pull it up.
I don't think they sell one thing. I think they don't sell
their revenue. Actually, I looked it up earlier. It was super bumpy. I was wondering.
I don't think they sell much.
No, they had like 5 million in revenue and like it was 18 or 19 and like 4 million, 6 million thereafter. Then all of a sudden it went to like 900 million projected for 2019. But then next year it goes back down to like next to nothing again.
It's a payment for reaching a milestone from one of the companies. So there's two types of companies you can invest in. There's companies that own IP, like they just are worth something because of what they own. And then there's companies that produce profits. Okay.
Mm-hmm.
I stick with the produced profits most of the time because as a shareholder that I can quantify and I can get a return, whether dividends, stock buybacks, or reinvestments or acquisitions. When you invest in any of these gene editing companies, so first of all, I think it's one of the most exciting, interesting, amazing parts of medicine. No question. Now, why is it not investable? Because we don't know how we're going to use any of this yet. There isn't an application that's safe to use yet. Although there might be many, and it might be amazing. There is nothing today. And there are many, not only health issues to question with gene editing, but also ethical issues too. And so as we move forward with these really awesome, great technologies, I think there's a lot still to learn. And so these are the things I watch. I watch very closely because I'm sure if you got in early on these stocks, you've done really, really well. And I knew about these stocks early from one of my genetic friends. And I looked at them and it was the same thing. It's like, I can't quantify what this is going to be worth over the long term. I don't know, but it's already worth billions according to the stock market. And there's no way to quantify the revenue of what they're doing. So I think that they're investable. Like you can buy that ARK fund, like ARK Genomic, and get exposure to it, but it's going to trade down over the next couple of years with rates going up. So these are the stocks get hit hardest. See, when rates go up, if you're paying a dividend and you're earning profits, you're not going to go down that much. Actually, when rates go up, having a dividend is real helpful because you're still getting cash flow that you can reinvest in a lower stock price and increase your dividend. So it's like when you own like a dividend stock and the price goes down, you buy more.
Yeah.
But when you own Editas,
yield goes up.
Right. When you own Editas and the stock goes down, it's a value. What's the value of my IP? And it's totally subjective. And that's the problem. It's totally subjective.
Yeah. Got it.
So I think they're investable, but high risk.
Yeah. Are you doing any of the Beachbody Peloton, or is this fad coming back here in at the end of winter and January? We gonna get this the workout buffs coming back?
First of all, Beachbodies and Peloton are completely different companies that have completely different issues in the same industry. Okay. Peloton is on the way out. Okay. So Peloton was a super popular bike last year, and its popularity is sort of waning because outside is still better. And so getting on your bike and riding outside is still better than riding inside. Now, the classes and all this stuff are great, but people did them for like a year straight, like 2 years straight. And a lot of people are like, because I'm involved with the fitness community here in LA, a lot of people are back to going out and working out outside and going back to the gyms, and life is back to normal. People are going to gyms. Now, I'm not to say that connected fitness isn't a trend that I think is going to grow like crazy. I do. But Peloton's execution has been subpar. From killing a kid on the treadmill to the way they handled it, to the recalls, to now lowering prices, none of it looks good to me. Okay. So I don't own Peloton and I wouldn't recommend it. Now, Beachbodies is a different story. I use the Beachbody stuff and I'm a gym guy, and I've kind of fallen in love with connected fitness because I'm in the best shape that I've been in decades because of it, because I do like the trainers and the classes and getting me to motivate to push myself harder on a bike that normally I'm bored riding. And the equipment they give you, the weights, the mats, the yoga stuff, it's great. But also they have supplements, which is what they don't have at Peloton. And there's so much money in this Herbalife, shakes and energy drinks and diet things. That's part of Beachbodies. So now Beachbodies is integrating everything onto the screen of the bike, because it was like Mixed Bike and Ladders and Beachbodies. It was like all these companies they put together, Open Fit, and they put them all together. And now they're merging this onto one platform, and it's good. It's really good. So the stock has been a dog because it's a SPAC. So everybody sold all their SPACs because everybody's out of SPACs now. And the stock's gone from, let's say, $10 when it's SPAC to now like $5.50 or something.
Yeah.
But Carl Drecker is the real thing. This is a real company. This is a real SPAC. This is not a Shamath SPAC. This is a real company. And it's been here next to my company for 20 years. I've watched Beachbodies. Okay. It's not like, see, this is the angle I have that other people don't have. They're next door to us. So like, we know people who've worked there for years. Like, this is a legit company. Now they've got to take an old brand, because Beachbodies is like a 90s brand, and modernize it. And they're doing it through the Open Fit brand. And if they successfully do this, and you look at the company's worth like $1.5 billion or something now, it's a huge buy. So I'm waiting, haven't done anything. I've had to tax loss harvest out of my Beachbodies position, take my loss, because that's the way it works at my firm. And now I'm waiting, because when Christmas rolls around again, I still think they do well. I think this is a trend that's not going to change. I got back 40 minutes a day by not driving to the gym and back, and I can work out for a whole workout. What it used to take me just to go to the gym, work out, and, go to the gym and come back is my whole workout now. Yeah. And I do miss the gym. I do miss the gym, and I'll probably go back here and there, but I'm in the best shape I have ever been, thanks to Beachbodies, and
Fine.
I think it's a great thing. Oh, seriously, like I'm super stoked about it.
What about Rivian?
So I like it. I like Rivian too. We've got a
Okay.
bunch of new clients from Rivian now. Looks like they've been hiring a lot of people from the EV industry around here, the Tesla people and other people. So we're getting some good insights into Rivian right now. The biggest issue with the Rivian IPO is the price.
Yeah. 80
it's not
bill,
worth
man.
$80
Come
billion.
on, man.
If they're worth 80 billion, I'm a billionaire. You know what I mean? It's like you could just assign whatever net worth you want at some point. Like what's GK worth? Oh, $1 billion. It's worth $1 billion. I'm a billionaire now. It's like people just put this stuff out. Oh, I raised $10 at $1 billion valuation, so I'm a billionaire. And it's crazy. It's crazy. So how could it be a company losing $1 billion a year? They just dropped their financials and they're losing $1 billion a year. They have billions in deficits. They are billions more away from getting to profitability. They are at Tesla 5 years ago. No interest.
Or worse.
100% interest in their success. Like I want them to be successful. I love the vehicles. I want EVs. I support them 100%. I will not be buying their stock at $80 billion. And it has nothing to do with like the company, the people, the truck, their future, and whatever. I think it's just pricing a huge amount of their future ahead.
So, this has been really insightful about a lot of things. We talked Tesla, the super cycle, commodities, inflation, uncertainties and that. What the big one, though, I want to go back to before we wrap up is you mentioned that we've got pretty much guaranteed a recession coming as rates go up.
Right.
How are you going to position yourself for that? At what point do you start making adjustments where you say, we got to get a little more defensive. We got to go a little bit heavier on the dividends. Is it all down to the Fed's interest rate cycle?
Yeah. So in my life of doing this, I've tried many ways to avoid pain, like in the stock market. Maybe if I shift this way or shift that way or do this or own this asset or this diversification or this allocation will prevent the pain,
Yeah.
There's no way, so part of it is there's pain in being an investor. Okay. That's why most people fail is they give up when it gets hard.
Yeah.
Okay. That's why everybody isn't rich, because over the last 100 years, the stock market has been the greatest creator of wealth ever, seconded by real estate, right? And so like when you think about the wealth creation in stocks and real estate over the last 100 years in America, all you had to do, no matter how smart or dumb you are, was buy a house and invest in your 401k or your or anywhere, or mutual fund or anywhere and just save 10% of your income. And you're a multimillionaire today.
Yeah.
So if you, at any point in history over the last 100 years, you spent 30 years owning a home and investing on the side, you're a multimillionaire today. We've created tremendous wealth in this country. So while everybody's complaining about wealth inequality, the issue isn't wealth inequality. The issue is education inequality. The fact that so many of our young people are left behind while we invest in the old people's health. Yep. And so while we don't educate people to buy a home, invest on the side, it doesn't matter what your skills are. I have one of my wealthiest clients is a gardener. He's got over $10 million. Okay. And that's his stocks. He has real estate, probably another 10 million. He came to this country as a kid. He's been gardening. He's still gardening. Well, they call it landscaping now because he's built his company into a big landscaping company, right?
Nice.
And the guy, ever since he was a kid, he was from Mexico. He took every dollar and invested it. He bought real estate. He bought real estate because that was all he knew. Okay. And his goal in life was to put his kids through school, And so he put his kids through school and now they're both spoiled, whatever. And don't work at the company. I think one brother does. The dad's still working. And I'm literally like, dude, what is wrong with you? Like, retire. You got $25 million. Your kids are living the dream life, like, come on, but he just like lives his work. Like He's just what that older generation, but he's saved and
Love
invested all his money, and he's been hugely successful. And
Good.
so, that's my advice to everybody. And so when you think about, the future, the most important thing we do is educate our people, get them to invest, and you'll be wealthy over time. So the bad years are going to come, and you buy more, and you buy more.
I love it.
And so if you look at your life, like every year I'm going to buy stocks for the next 30 years. And in the next 30 years, there'll be 6 or 7 bad years. Okay. That's such a good game. People are going to go bet on sports right now, and it's a 50-50 chance or worse. And in the stock market, it's a 75-80% chance that you're going to make money every year. So when the years are bad, your goal is to limit your losses. There's nothing more to it. You're going to lose. You're going to lose. You're not going to make money. You're not going to be the short seller who calls it right. Oh, I'm Chanos. Oh, no, you're not going to be that person. So what happens is you own all these stocks. They reach a certain valuation, and the Fed starts acting. The Fed's told us everything. It's beautiful, right? So they're going to taper. People get scared. You buy. The taper ends next year. Who cares? Then the Fed's going to start talking it up, and the market's going to go like this. And then the Fed will start raising rates, and the market will be okay, comfortable. And then they'll be like, how many times are they going to do this? Okay. The third rate increase, you're out.
Wow.
That's the rule.
Wait.
When I say you're out, you got to take money and take it out of the stock market completely. And that is the only thing that works.
That could be third. If we have one rate increase in 22, we're looking at potentially the middle of 2023. You're saying 23, just get out.
That's my plan right now. Yeah, I'll probably be out. Yeah.
So GK will be 100%.
So we got about a year and a half in here. Well, here's the beauty of it. So with my company, right? Well, we manage all these accounts, so we rebalance and all this kind of stuff. And now we have alternative assets too. But remember, I don't expect Bitcoin to do well in a rising rate environment either, because it makes dollars more competitive.
That's true.
You see what I'm saying?
Yeah,
okay,
sure. More people. Yeah, okay.
It's not good for Bitcoin if the government gets responsible, right? Like Bitcoin loves irresponsible governments, And so if the government pays interest, right? If the government doesn't have deficits and pays interest, people move their money back to dollars. But fortunately, that's not going to happen. So, so cash or gold or whatever, or Bitcoin, I prefer just cash, because in my mind, you just put the money away and you just got to wait. And so you'll get it's kind of like this tease thing down. You get this staircase down. And so people get all bullish again, like maybe they're done, and then another rate comes. And then what happens is the Fed, they have to play this game of, what did they call it in the 90s? It was like, you just want to get it high enough to slow down the inflation, but not kill the economy.
Right.
Okay. And that's Alan Greenspan pulled that off in 95, and it was the most wealth creating period of time for 5 years until he completely killed it in 99. Okay. When he raised rates to 5%. So to me, that's the huge bullish sign. So when the Fed gets to that maximum point of rates and they stop, then you take that cash and you go all in, because now the only way is down for rates. And so as an investor, when rates are moving higher, you pull out money. And when rates are moving lower, you add money into stocks. And it's as simple as that. What is hard is your brain, because the markets are going up and you've been making money for years and you don't want to hear about it. Oh, it's only one increase. Oh, I don't want to get out of the markets now. I don't want to pay taxes. Oh, the market rallied again and I got out. Ross, why'd you get me out? Market's up again. Trust me, staircase down. It's just a matter of time. And then when you get whacked are those days where it's just like down 3%. And you're like, what the fuck happened today? And you're like, oh,
yeah, right.
Jerome Powell said something, and there's nothing you can do. You can't time it. You see what I'm saying?
No, not those things.
Like you don't know when that, and you just get whacked. And that's the part that's hard about this business, is fighting your emotions, acting rationally when it's hard. And that's kind of why it's great to have a financial advisor. That's why we work with so many individual investors. It's not that people are dumb and can't invest their money. They absolutely can. It's the emotional management that's hard. It's the emotional management. And that's why I like my trainer on Beachbodies, because my trainer on Beachbodies gets me to do more than I would otherwise do. And it's helpful. And that's why you have a financial advisor, because it's not that your idea might be dumb or not dumb, but maybe your emotions are going a little bit crazy. And you call us and we're like, hey, listen, Kevin, you know, a lot of what you're saying is true, but you're being overly emotional about it. Okay. Is this really that bad? You're like, well, probably not. And then you move on. And that's that collaboration. That's why I like this show. You've become a very smart investor, and we have these discussions, which I enjoy. And it's like, how do we take the emotion out of this and really like make rational decisions in times that are incredibly challenging emotionally, especially like in 2020 in March, you know, we held it together, you know, boy, it's a big difference when you hold it together and you can make strong investments and end up having the best year of your career in the worst bear market you've ever had. So I will leave you with this thought. Heroes are made in bear markets. That's when you make money. That's when you make money, is when everything looks horrible, bad, and your stomach hurts, and you don't want to even look at your phone, and you don't want to, and you wish it was Saturday. I don't want to look at the stock market again. You know, that's when you buy. That's when you buy. And so I actually look forward to those days, because that's how I make tons of money. Right now, I can only make so much money because it's like kind of easy. You know what I mean? And so like last month when it got hard, the market drops 5%, we're able to buy stuff, you know, so we were very active last month, you know. So having cash on the side is also really important, or crypto or whatever you want to call it, things, preferably cash that doesn't move around as much, because then you can always be a buyer. But if you're liquidating as you get more and more concerned and rates go up, and then the bear market hits, you're fully ready.
I've got
and
some more to go.
That's how heroes are made. And that's
I like
when
that.
Heroes are made.
Well, and I wanted to pull this up just to reiterate before we end here, to show what you're talking about. Here's just quickly for folks watching, rates really skyrocketing here by the Federal Reserve. This is the Fed's funds rate here, and jumping all the way until January, where, like you said, they started leveling rates. That was the top. Down was the only way. I mean, ignore this portion because this is the well, you can't see it. Hold on. This portion over here, just ignore this portion because it's the pandemic. Right. Yeah. But here is that downtrend, right? And what's great is if you now go over to the S&P 500, remember the tip here, the tippy top, January 2019, you look over here, again, ignore the pandemic, you go over here to the end of 18, you're down 17.5% from September to December of 18 as those rates are going up. You get to that tippy top, all of a sudden you get to 19, it's just straight up from there.
I mean, I've done this for the entire history of the stock market. So like I've gone through and analyzed, like that's why I do this for a living. Like when I was a kid, I used to read the financial reports for every company in the S&P 500. Like I wanted to learn everything, you know, and like, so when I like get frustrated or like, I literally will dive in and study every bear market that's ever happened. And I have studied every bear market that's ever happened. And I remember every year of trading since I started in 87 or 86. So I literally, if you ask me like what happened in 89 or what happened in 94 or what happened in 2005, I can tell you the entire year. I can tell you what did well, didn't do well, how I did, you know, what happened. So when I think now I'm old, you know, like I started, I was 23, you know, my first day in the stock market as a pro, I was 23. There was no, you know, you called in trades. There was no computers.
Sure.
And I had a laptop. I was the innovator of the firm. And I tell that story a lot. But yeah, I was the innovator of the firm. I refused to use the typewriter. And this was 94. And so like when you think about all these periods of time, it's 100% rates. It's just 100% rates. There's no other game. So the game I play is find the best companies that are earning the fastest growth of earnings with the lowest price I can buy for that growth of earnings. That's buying stocks. And then what I pay for that is going to be 100% related to what rates are. And that's the game. There's nothing more to it.
Nice. Nailed it. So Ross, how do people—
Wait, I got a question. I got a question for you. Before we wrap it up. Okay. everybody wants to know about the green hair. You're not going to get away from it. I know you're throwing people for a loop here. I want to know about the green hair, and I also want to hear like what you've learned in the last 3 to 6 months from your experiences being in politics and some of the things you did. Like, what are some of the things you learned? It's something I've never done, and I was very impressed by how much effort you put into it. It was legit. You didn't just fluff it. And what have you learned?
Well, I'll answer your second question first.
Okay.
So, yeah, look, the politics, the last 3 to 6 months, really incredible. I think the biggest takeaway I had is that the biggest thing that drives votes in politics is fear of the other side. See, when Larry Elder was not in this race in California, this was a race of moderates against Gavin Newsom. So he was up against people like me and other moderates on the other side saying things like, we need better schools. We need to deal with homelessness. We need to deal with our water and fire crisis. Like, this is like no-brainer stuff that California needs, right?
Right.
Larry Elder gets into the race, and his premise is, I'm going to end COVID restrictions before my first cup of tea, right at the same time as the Delta variant starts skyrocketing. Well, now you just handed the election to Gavin Newsom on a silver platter because all Gavin Newsom has to say is, that guy wants to kill your children. And Larry Elder wants to say, you have choice. And so it becomes, the election became choice or death. That's what this election was. And so politics has this tendency of coming down to fear of the other side. It was the same thing with Trump versus Biden. Look, Trump versus Biden. Do you want, or how fearful are you of Trump versus just having somebody like Biden, who's, let's say it, kind of somewhat boring relative to Trump, right?
Boring. He's like completely out of it.
All right. I mean, it's the same thing. Do you want Trump or Hillary and her emails? You know, it's the same. It's fear.
That's so true. It's so true.
That's all elections come down to, is fear. And, you know, when I figure out the answer to your first question, you'll be the first to know.
All right. Bring your wife on. I want to talk to your wife. We got to get to the bottom of this. I'm sure your wife can understand the psychology better.
She's at an old folks home right now, trying to find a place for our grandmother.
Oh, okay, good. Yeah, that's no fun. That's
no fun. It's not. So, okay, Ross, how do people get in touch with you? I've got some links down below, but how do people get in touch with your firm? Shout you out.
So Gerber Kawasaki, we work with all individuals, whether you're new to investing, we have a Get Invested program, or you're an experienced investor. It's time to get a financial advisor. You can work with us at gerberkawasaki.com. If you go to our website, send us an email through our website. We'll set you up with an advisor, and it's a free initial consultation. Doesn't cost you anything. You got a Robinhood account, you got whatever. It's time to get some advice because, as I said, things have been pretty easy the last 3 years in the markets, but the next 3 years are going to be more challenging. So it's great time to get advice, especially if you're doing crypto. We're the only RIA that advises on crypto. We open accounts through Gemini. Our returns for our crypto clients have been amazing because our timing, and we were buying the dip down at 30,000. So we're actually making our crypto clients a lot of money. You know, like, this is a new business for us, and we only have a few million in, but when you go, you know, you got 3-4 million in, the market rallies 50%. You're like, wow, I just made $1 million in crypto for my clients. So now, you know, if you want advice on your crypto, and we use Gemini and we put everything in cold storage. So it's the safest way to own crypto because Coinbase is like a hackathon. So, you know, if you have a large amount of crypto, we can help you secure it very, very safely. The Winklevosses are very good at securing Bitcoins because that's where all their wealth is. If you want to invest with us, you can do it through our fund, GK. It's advisorshares.com, all the information about our fund. GK is a growth investment fund. It's multi-thematic, with our top themes being technology and climate change, and then followed by many other things, including things that used to be illegal, like cannabis and online gambling, to the pet industry, which we're heavily invested in, stocks like Petco and Chewy and Zoetis. So it's a great fund to complement the rest of your investments, whether it be you own ARK or you own a bunch of sector funds. We're kind of your core growth fund. We're actively managed. I manage it every day, like I manage every other account, and it gives you access to our portfolio. So it's a great diversifier if you have passive funds, and it's great to add to your sector fund so you have a broader diversification. So that's our fund, GK, listed on New York Stock Exchange. You can buy it through your platform. So thank you very much. And, you know, obviously we were fully transparent in our firm and what we're doing and what I'm doing. I'm one of the only investors in the world that's fully transparent about everything that we're doing. And that's because I want to help you all make more money. Ideally, if we all work together, there's no loser. There's no loser in the stock market. The loser is the short seller, right? The losers are the short sellers. So if you ever want to meet a bunch of losers, talk to short sellers. They're losers. The winners, they're long. So go long and stay strong.
Wow, what an ending. That's great. Awesome. Ross, thank you so much for coming back on the show, and look forward to having you again sometime in the future.
Thanks so much for having me and your great audience. You have the best audience in the world. Wonderful people. You've done a great job with your show, and thanks for what you do. You bring in finance to a lot of people. You're helping a lot of people where the traditional media doesn't really care. And that's, I think, what's great about what you're doing. So thank you, Kevin. And thanks for having me.
Thanks so much. Stand by for a moment. Everybody else, thank you so much for being here. Consider subscribing, share the video if you liked it, and we'll see you in the next one. Thanks. Bye.